Hello and welcome to Business Incorporated live on Channels Television. It's a midweek trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. We'll drill down on expectations as Nigeria's NNPCL seeks another oil-backed loan. As the battle to tame inflation continues, some are winning the battle as Egypt's inflation slowed for a fourth month in June. Plus, Robusta coffee prices surge to record highs as supplies tighten. And it's great to have you join us. I'm Laddie Williams. First off, let's kick off with commodity markets now, starting with metals. We see gold prices edged up again. Spot gold, $2,379, up about 0.47%. So we're seeing a bounce back from the sell-offs you saw previously. Also hearing that most of the central bankers have stopped buying gold like they did before to get to this price. Spot silver, 0.53%, up $31.22 per ounce. And we see palladium back below the $1,000 mark. It did cross over that mark yesterday, but it's below that, but up 0.28%. Let's get a check on other commodities now. See Robusta coffee prices surged to a record high with the global market tightened by a slowdown in shipments from top producer Vietnam. Price of Robusta beans, LRCC2 has risen 63% this year, peaking yesterday at $4,667 a metric ton on the London-based ICE futures Europe market. The market has been rising for about 18 months as global producers such as Vietnam struggle to keep pace with steadily rising demand. Prices climbed about 58% in 2023. We see the youth wing of the All Progressives Congress is organizing an empowerment program for skills acquisition. The program, which has in attendance stakeholders including the Bank of Industry, Smedon, and others, set to prepare the attendees for doing business in Nigeria. Take a listen.
Being a ruling party is not just about winning elections, but empowering youth in the country beyond party lines. That's the focal point of this Enterprise Skills Development Training Program for 2024. While the insignia of the All Progressives Congress dots the venue, the event is open to all who is ready to get empowered.
Do that for him. Thank you.
The APC youth leader, Dr. Dayo Israel, says this is part of the wing's 4-year plan to contribute to the President Bola Tinubu's development drive.
We want to turn our young people from job seekers to job creators. We want to build the capacity of everybody in this hall, not just youth, but even those who are youth at heart, to help them to see and move from just being a dreamer to turn their dreams into reality. And that's what this training is about.
The training begins with words to reorientate all present on the need to actively contribute to economic development.
But ultimately, no business, no company can ever pay you what you're worth. The best solution for any nation, as we all know, is the masses getting involved in business and feeding themselves, fending for themselves. And so today I would encourage you, whether or not you are in entrepreneurship or you are in a 9-to-5, please create value.
Sometimes along the way you find a helper, like we are here today. Somebody might just impress me and we get chatting and he says, oh, bros, I have this proposal. If it looks good, yes. If you come to me for help, I tell people I don't just help. You want to set up a business, go and must plan. You must have a focus. There is no free lunch. Especially for those who work hard, they will not give you free lunch.
Thank you.
The program promises hands-on experience for all registered participants from July 8 to 12.
All right, let's get a check on oil prices now for the midweek trading sessions. Expectations that U.S. crude and gasoline inventories fell last week. But we see further gains were limited at the restart of output in the U.S. Gulf. So we see oil prices were down much earlier in the day, but we're seeing some movement at this time. 0.69%, $84.08 a barrel for half a Brent. And WTI, that's US grade, marginally holding on to that $80 mark there, down about 0.59%. So we're still seeing weakness right there in the oil market. To our first conversation now, we've seen Nigeria's NNPC Limited is currently negotiating another oil-backed loan to enhance its financial position and facilitate investment in its operations, and that's according to the chief executive, Mr. Mele Kyari. Let's discuss this and expectations for OPEC's monthly oil market report, expecting one for June. That's coming out sometime today. We have Chinan Dickwall, Vice Chair, African Energy Council, joining us via Zoom. Great to have you, Chinan.
Hi, Ladi. Great to see you again. Pleasure to be here.
Fantastic. So we're seeing the NNPC chief, Mele Kyari, saying the company wants a loan against about 30 to 35,000 barrels per day of crude production. How are you seeing this move?
Yeah, so, Ladi, I'll be quite frank. For lots of experts like myself, we look at that and view it with a lot of concern, I've got to say. This is coming on the back of August of 2023. The NNPC went cap in hand to Afrexim Bank, and we got a similar loan, oil-backed loan of $3.3 billion. And we've just executed that. This is a second loan we're drawing in a very short period of time. That tops up, add everything together, $5.3 billion. So it's really concerning because there's a bit of opacity in terms of how this money is being spent. But I'll say this, Ladi. We're finding ourselves in a very difficult situation. I don't mean to sound alarmist here. Finding ourselves in quite a difficult situation. Why? Because NNPC appears to be owing a lot of the importers of crude oil today. It was initially $3 billion as we knew it, but that amount has ballooned to about $6 billion in the last 4 months. In fact, I'd say this, some of the people who provided crude in January have not been paid. And just based on the contract terms, which is 90 days contract terms, you need to pay once delivered 90 days, it's been increasing very steadily. So it does sound like this new $2 billion, oil-backed loan that they're seeking is to enhance operations, potentially to settle some of that debt and get some of it up and running. But that would be really disappointing because you're going to borrow for you to settle more debt. You're taking money from one pocket to put in another pocket. And I think this is where it becomes quite alarming for people like me.
All right, talk to me exactly how this works, because we now call the company the NNPCL. So it's supposed to be a limited liability company now. So are we saying they have the right to just mortgage our oil production at this point, since they're not a private company?
Yeah, they are a private company, without a doubt, but majority of the shares are still owned by the Nigerian state. What's happened ultimately is the governance structure has changed. You have a CEO right now who answers to the board as opposed to answer to the Nigerian president. So he's sort of autonomous in that regard. But you have to recognize that this has just happened. This, sort of reorganization has just happened. It's still very much tied to the state in one way or the other. I think what many investors are looking with a lot of concern is how the running of NNPC has been. It just does not make sense that we have $3 billion in January, and today we're talking about $6 billion, principally just by means of interest accruals. A 90-day payment term, which is when you need to pay the crude oil, has not been actioned, and therefore this money has been ballooning quite a lot. I think that's the first one. The second to think about it, even some of the petroleum importers right now are not honoring the tenders. So when NNPC puts out the tender right now for crude oil importation, many people are declining to participate because the creditworthiness of the organization is in question. And I think that's the big question right now. How does that translate to having gasoline and petrol products on the streets of Abuja and Lagos? I think that's where it becomes very, very concerning.
Right, and definitely we see the likes of Dangote Refinery importing crude from the U.S. That's WTI grade at this time. And we're still seeing more plans to get more oil-backed loans. How's this going to impact all our refining plans, at this point? Do we now become an oil importing nation?
No, so it's a great question, Ladi. I mean, by all indications, Dangote refinery was meant to be the silver bullet. It's a 650 million barrel capacity, sort of plant. So it's meant to be a silver bullet. I just think operationally, where we stand today, just by means of the fact that it was finalized this year and some of the complexities around the contract. Frankly, I would say some of them are artificial for now, but I think the present administration, they have the wherewithal to make that happen and make that crude oil available to Dangote. The only thing I would say, though, Ladi, which is very important here, is this. Bear in mind, after subsidy was removed, the government came and capped the crude oil price just above 600 naira per litre. That's where it stands today. Unfortunately, since that's happened, because of the devaluation of the naira, the market price of crude oil has gone up significantly. So there is a massive delta as well by means of subsidy that government would have to pay. Now, I'm answering your question because if Dangote is meant to sell that crude into the Nigerian market, he will be selling it at a loss. Unless, of course, he pulls off subsidy as well from the government. But this is the problem. This is where we find ourselves at 600 naira per litre. And unfortunately, the market price is way higher than that today because of devaluation. We still have subsidy. In fact, I put it to you, Ladi, the total bill of the subsidy today for this month is about $3.7 billion. So it's very significant. It's a very significant amount of money that's accruing.
Yeah, quite a lot of money. And I'd like to know, do other oil-producing countries take out these kind of loans?
Some of them are, going for loans like this, which are oil backed. I mean, it's a natural thing to do, borrow against your reserves, and it kind of makes sense. But many of them, of course, are doing it in a very, very conscious way. 30,000 barrels, 30 to 35,000 barrels per day. It's a massive number, with all due respect. A company like NNPC, and I think that reorganization where it becomes a, limited company, it should allow it to hold cash on its balance sheet. Because it's a proper private organization right now. It should hold cash on its balance sheet, and where necessary, it should draw cash from its P&L, as opposed to constantly going to market and pulling it up from there and taking loans. I think this is where it becomes, slightly alarming for many people. But yes, to answer your question, some countries are doing that, but they're not. Many of the companies are probably not as big as the NNPC.
And, looking at things and the pace, at this time and the way the NNPCL is set up, do you think this company will ever be profitable, at this rate, with this kind of arrangements we see?
It is possible to. So when you look at NNPC principally as a business, from a reserve standpoint, it's extremely attractive. We've got, huge amounts of oil, huge amounts of gas, without a doubt, the lightest amount of oil you can find anywhere. We just sanctioned, another LNG project. Well, not sanctioned, we're in the process of looking at it with Gola. So from that standpoint, it's extremely attractive. The big problem, the big issue, so I'm talking geology now, below ground. So anything below the ground, the geology of Nigeria is super attractive. The main problem we're facing are the above ground risks. The above ground risks, security issues, and all of the challenges around that, and the complexity of contracts. And that is where Nigeria continues to fail. And I think if NNPCL would be successful, it would really need to reorganize, because the old NNPC that we know and its operations that we see presents a really concerning thing when you put it out to international investors. I don't see how a company like that will pull in investment from outside, because people need to see a transparent system of governance. First of all, the governance system needs to be entirely transparent before any investor can be able to put in money. So far, we're not quite seeing that. We're seeing a lot of loans being raised. We can't see how that's being divvied up into production, if you like.
Right, and we keep talking about boosting oil production in Nigeria. Walk me through what we should start doing right now, to get some kind of results in the short term.
Yeah, so Ladi, I'll answer that question, but can I say this? Bear in mind, in 2024, the Bola Tinubu government have the target price of 1.7 million barrels per year. So our budget was meant to be on 1.7 million. Bear in mind our fiscal break-even, so the forecast that the central bank and the Office of Budget would do was about $65 per barrel. Yes, oil is about $65 per barrel, which is great, but we're really far short of 1.7 million barrels per day. In the last one in May, we're about $1.25 million per day. So there's a massive shortfall there. So when you look at that, you actually see that there's a massive delta, which ultimately translates to the Nigerian state. And that's what you're seeing there. We're starting to see queues of, petrol queues open up in Lagos and Abuja and all around the place. And I'll put it this way as well, very disappointingly, we saw what happened in Kenya, 2 weeks ago, where similar policies resulted to that. We do not hope for that to happen in Nigeria. But when you look at the fiscals and the way the system is structured, particularly within, the oil and gas sector, I still think that we need a lot of transparency to enable us to navigate these waters. I don't know if did I answer your question? I'm not sure I answered that question.
Right. I guess we need policies that don't pass on the bulk, to the people. At this point. All right, let's look at what to expect. We know OPEC, they normally release their monthly oil market report. We're expecting one for June. What are you seeing?
I'm an optimist, Ladi. I'm very optimistic about that. I think OML 13 in Akwa Ibom State started producing last month, I think, and went through 40,000 barrels per day. So hopefully, I'm hoping that we'll see those barrels come onto the market. Bear in mind, in the month of May, our total crude production was 1.25 million barrels per day. So hopefully, those barrels come onto the market. I'm expecting about 1.3 roughly. But again, I'm really hoping. Hopefully, there's not been, any shutdowns as well. But I think the only way is up. We have to think about this. When this new administration came in, they found oil at about 1.2 million barrels per day. They ramped it up very quickly. In January of 2024, we were 1.46 million barrels per day. So that was achieved fairly quickly. I think between January and now, there's been a lot of back and forth. The pipeline, Transfocados pipeline, was down for a bit, and I think we had other challenges. But I think if these things can be plugged in really fast, then we can very quickly get to 1.4 and very quickly ramp up to 1.5 and maybe close out the year close to 1.6. I would be hoping.
Right, now we've seen the price performance for Brent and WTI for the first half of 2024. What are you seeing for the second half of 2024 with price action for Brent and WTI?
So I think this probably gives us a bit of room for optimism. I mean, you would have seen it last week. The US stockpiles decreased very significantly, which I think is a very positive step, particularly as we go into the months of the summer. People are starting to travel, and all of that's a holidaying, very much so. So that's putting additional demand. So I think from the demand side, we're looking very robust. When you go to the supply side, which is where OPEC sit, you saw that very clearly. They're extending the cuts again for a long period of time. So I think, without a doubt, would have very robust demand for Q2 of this year, matched by sort of supply, but demand certainly, in a very, very big way. But I think when you look further down, Laddie, interest rates have been really high for the last year and a half, really high. The signal right now we're getting is possibly in the month of September, the Federal Reserve in the US might cut interest rates. When they cut that, of course, it stimulates the economy, allows people to start to spend again, and hopefully, that translates into, greater demand for crude oil. So I think the macroeconomic picture looks relatively rosy. In fact, just yesterday, the EIA, the Energy Information Agency in the US, they put out an analysis that suggested that 2025 would see massive demand growth. In fact, demand would outpace supply in 2025. So that's actually a new sort of dimension, a bit of a different dimension to what we've seen, and that makes it very exciting for Nigeria. Like I said there, I think the main thing for people like me, when I think about this, is if our budget is based on 1.7 million barrels per day, and today we're 1.2 million barrels per day, that's a massive delta. If our fiscal break-even for our budget is $65, but then today we're 84, okay, that's positive. But when you look at it and you do the net, we're still net negative. Nigeria needs to think very cleverly around how it undertakes its budget and how that would impact the daily runnings of government. I think that's one of the big things that probably the central bank governor will be taking out of this, because this year, quite frankly, we've not met the mark at all.
Right, I guess it's matching production with price increases. Oh, thank you so much. Always great having perspective. China Ndekwa, Vice Chair, African Energy Council. Thank you so much.
Pleasure. Thank you.
All right, we'll take a break now. When we come back, we head straight to the markets. That's in a moment. Do stay with us. All right, let's get a sense of how your money is performing. We have Anete Edit with the details there for most of the markets we track. Good to have you, Anete. So, quarter to date, down. Week to date, down. Second half of 2024 to date, down.
For the market.
And that's for the local boss. What do you see?
That's of course, put your money where your mouth is. And
right.
We're given the macroeconomic environment that we are, people need money. So self-pressure.
The bright spot is year to date. It's still over 30%.
Yes, year to date. According to what I have here, year to date is 33.5%. Of course, in positive terrain. And like yesterday, that we mentioned that it closed the first half of 2024 still as Africa's best, and still within the same margin. But in terms of month to date, it is a minus 0.3%. So, like at the close of Tuesday's trading session, we saw 113 billion naira being knocked off from the total value of listed equities. And this is because the Fugas, what you have as the top tier banks, First Bank, Union Bank, First Bank, UBA, GT Co, Access, and Zenith, they were the ones that caused market. But at intraday, this is what you see the number there, 0.05% at intraday, and still falling below the 100,000 points. All the way from just last week, we had reached 100,000 points. But of course, let's tell our viewers much more about this number. The number for the Nigerian Stock Exchange All-Share Index, all the way from 100 and over 100, slightly over 100,000, but now it has fallen below that level because it started Monday in negative, Tuesday also negative, and intraday also in the negative. And then, of course, we're still seeing some self-pressure on the likes of banks and as well as some consumer goods giants. Not too far, just a couple of days ago, we heard the announcement from the NGX that 8 companies were they were placed on technical suspension, so no trading on their share prices. One of them is a banking stock. So that's for Nigeria stock market. And for South Africa, where we see here 0.30% pullback at intraday, and of course it's been oscillating between 80,000 and 79,000. It reached at some point, it had gotten to about 81,000, but we saw that pullback just a couple of days ago. Now let's move over to the other side of the market, where we see Egyptian Stock Exchange 0.52%. So most of the African countries indexes that we track for at intraday, they were in the red, but for Kenya, it was a positive close for them. At the close of Tuesday's trading session, we saw a plus 0.2% in the green for that market. And we're still with Nigeria's financial markets, but this time on the fixed income side of the market, where we see, first of all, the NTB auctions. For the NTB, we saw on Tuesday, we saw average yield expanded by 60 basis points to about 23.5%. And of course, this tells us that first, it was a bearish close for the market, bearish on one side, and that's because we saw the average yield paired at the short end by 1 basis point falling demand for the 79-day to maturity bill, but it expanded at the middle segment by 176 basis points. And at the long end, it was plus 32 basis points. That was driven largely by sell-off in the 121-day to maturity. Now, but talking about the proceedings in the bonds market, we saw it was very quiet for Tuesday, but now the market is still is in session, particularly when we take into cognizance that the central bank will be auctioning about 166.1 billion naira in treasury bills. So that primary market auction, which is the first for July, is currently underway, and we'll soon have analysts to talk to us more about that if we can get him online to give us more details about that proceeding, as well as what to expect for the treasury bills for the fixed income market, particularly the treasury bills market, where the announcement by the central bank is that they are targeting about 1.56 trillion naira to issue about 1.56 trillion naira in treasury bills within the third quarter of this year. And this is at the same time where we see average yield on the federal government's bond climbing marginally due to mild sell-off in the secondary market. And then next week we'll be having the inflation data, and this is also coming in between lower bonds issuance for the third quarter, like I just mentioned, 1.56%, which is slightly lower by 4.87% in contrast to what was issued in the second quarter of this year. So that's it for the Nigerian financial market. Now let's move over to Middle Eastern market, where we see kind of a mixed movement for the markets there. The UAE indexes, Abu Dhabi and the Dubai FM, both in the green, 0.03% for the Abu Dhabi, 9,138.57 points. And for the Dubai, 4,092.97, as you can see on the screen, and that's it in that region. But on the other side of the market, we see Saudi Arabia, the Tadawul, down by 0.08% at intraday, 11,770.74, while the Qatari Stock Exchange, you'll still see on both sides, we see profit taking on many of the listed stocks there, 0.04% at intraday for the Qatari Stock Exchange. And now let's move over to the world's biggest economy, that's the United States. Well, we see for the futures numbers, they're still in the green, but slightly changed. And this is coming because most of the stock, particularly the S&P 500, it hit another record at the close of Tuesday's trading session. But earlier today, we see the three markets in the green, 0.02% for the Dow Jones Industrial Average, the S&P 500, 0.14%, and the Nasdaq Tech Heavies, 0.25%. Now, overnight, we saw that most of the markets there, they climbed to a fresh record, and this is coming a day after following a dovish comment from the U.S. Federal Reserve Chairman about when he gave his testimony on Capitol Hill. Today they will be having comments from the Treasury Secretary, Janet Yellen, about the state of the U.S. economy. And of course, we also expect that there'll be a wholesale inventories reading for the month of May, which is coming out today. But for tomorrow, we'll be seeing the consumer price index reading for the U.S. market. That's on Thursday, and the June price index, which will follow on Friday. But for more details and a summary of how Wall Street closed on Tuesday's trading session, let's have our Washington correspondent, Maria Bird.
The U.S. stock market was mixed on Tuesday, as the Dow Jones was down at 0.13%, the S&P 500 slightly up at 0.07%, and the heavy tech Nasdaq up at 0.14%. Many investors still were not concerned because the Federal Reserve made its big appearance in Senate, as its twice-a-year meeting held today was one that gave insight into what will happen over the next weeks and days ahead. The Federal Reserve Chairman spoke before Senate and stated that he sees an inflation cooling, and this could be a good sign for interest rates. He cannot promise that interest rates will be cut anytime soon, but is expecting that they will be able to see some cuts before the end of 2024. Many investors are looking at this as a good sign for the U.S. stock market and is holding strong that we could see some market stabilization and continued growth over the next few days and weeks.
Maria Bird with the numbers from Wall Street for Tuesday, and that was a positive picture for the close of yesterday's trading session. Now, from there, we move over to Asia. We see the indexes also mostly slightly mixed. For the Nikkei, we saw 0.61%, and then the Kospi. But we'll be giving you more details about that. Let's get back to our guest, which we've been able to connect to him, Tobechukwu Ikpe, fixed income dealer at Access Bank, to give us more details about the primary market auction currently going on, carried out by the central bank, where they expected to raise about 166 points, to auction actually 166.1 billion naira in treasury bills for participating investors. Now, thank you for joining us, Tobechukwu Ikpe.
Hi, thank you for having me.
Okay, yeah. Now, this is the first for the month of July, and I know that this primary market auction is normally carried out about twice a week. Now, can you give us more details about this latest round of treasury bills auction carried out by the central bank?
So today there was a primary auction by the Central Bank of Nigeria on behalf of the federal government. So what it's saying is that they're raising funds they're borrowing funds from the general public to fund their budget needs. And today they are offering 166 billion. The previous auctions, we've seen the stop rates close at 20.68 for the last one, and the one before that was 20.50. So we don't expect any rate difference too far from these levels. We expect that this auction will close at between 20.4 to 20.70 levels. For the appetite for the auction, the subscription levels are always healthy. We see institutional investors, retail clients looking to place their funds at the treasury bills, willing to lend the government money at these high yields, given the high interest rate environment right now.
Okay, so now, Tobe, next week by Monday, we will be expecting the June inflation numbers to be released by the National Bureau of Statistics, and of course, at the same time, it's been projected to lower due to base effect. Now, what does this tell? What impact will this have on investor appetite for treasury bills for fixed income market instruments?
Well, the inflation numbers basically direct the forecast by the Apex Bank. That's one of the data points that they use that feed into their decision making when they set their monetary policy rates. And in their bid to tackle inflation, the rising inflation has led them to raise interest rates, which has also filtered into the fixed income markets. We've seen the highest rates in the fixed income markets in Nigeria ever. So if the inflation rate starts tapering down due to base effects, we will see this monetary policy committee start monitoring this and start to look at whether it's time to put the rising interest rates environment on a pause, hit the pedal on it, and maybe start to cut rates. So if that happens, we will see the fixed income market rate start to trend downwards also in anticipation of this.
Okay, so now at intraday, can you give us details about investors' response to the OMO maturities? If there's any OMO maturity, the treasury bills market, the fixed income market, what is the sentiment of investors?
So currently, for the market today, we've seen calm trading session. Most of the attention was on the PMA, the primary auction, as you said earlier, conducted by the CBN. We saw some healthy subscription from institutional investors and retail clients for that auction, but not much participation from the banks, given the illiquid money markets. Money markets today will open today at about 1.2 trillion in negative balance. Basically, what that means is that most banks are funding from the CBN right now due to CRR debits that happened last week, and the market hasn't still recovered from the money market hasn't still recovered from that. So although we'll see the auction to be oversubscribed, the secondary market activities right now are calm. We expect that the interbank interest rates will be elevated, and the NTB results, which will be released later today, to set the tone for trading activities in both the fixed income and money markets.
So, okay, all right. Thank you so much, Tobe. I think we'll leave it there. The outcome of that Treasury bills primary market auction being carried out by the central bank. So thank you so much for your analysis on our show.
Thank you for having me.
Okay, so now let's go back to the Middle East to the Asia market, where we talked about Japan. First of all, we said that the Japanese index, it was in the green, as well as the Kospi, South Korea's stock market, where we see Samsung, the union of Samsung workers there have called off the indefinite strike, which was earlier announced on Wednesday. And so the shares of Samsung, they were marginally up, and of course, was also rubbed off on the Kospi index, 2,867.99 points. So, Ladi, that's it for economic numbers out of Japan, as well as South Korea, out of China.
Right, we see labor everywhere trying to get the best, at this time with the rising cost of living, what we see with Samsung there. But thank you so much, Anita, for the details of most of the markets that we track right here and the global markets. But let's get a check on Europe now. We see the number of German businesses that are becoming insolvent. That's rising, and it's higher than was feared, according to a new study. DW correspondent Chipona Jibelu joins me now. So, Chip, what's the latest?
Thanks for having me. Well, Laddie, the number of insolvencies has reached the highest level in nearly a decade, and more bigger companies are becoming insolvent. So these are firms with a revenue of more than 10 million euros. There were 41% more insolvencies among such businesses in Germany in the first half of this year compared to the same period in 2023. Now, that is according to German business daily Handelsblatt. It cites data and analysis by consultancy firm Falkensteg. The worrying trend isn't just the rising number. Insolvent companies are also less likely to be rescued. Even big names such as the department store Galeria and fashion brand Esprit. Only around 1 in 3 of the companies that became insolvent this year could be rescued, according to the report. Now, that is much fewer than, say, 3 years ago when more than half could be saved. Experts say that investors are holding off saving companies, partly because they expect the number of insolvencies to continue rising.
For the German economy?
Well, the highest number of insolvencies was in the construction industry, and that isn't going to help solve one of the country's biggest challenges, the housing crisis. The latest figures show that rents in Germany's biggest cities have reached record levels, according to data from property listing site ImmoScout24. The housing market isn't keeping up with the demographic trends. For instance, the fact that 1 in 5 Germans lives alone. And these individuals are also spending a bigger proportion of their income on rent. That is, of course, leaving more and more people with less spending power. And the tight property market is also a headache for businesses. Hiring workers isn't the only challenge they face. New workers also need accommodation, especially if they're moving from somewhere else, like another country. So the housing crisis, a tight labor market, high interest rates which are hurting investment, are all making Germany a harder place to do business. And the recent jump in insolvencies is just the latest sign that Europe's biggest economy faces years of slow economic growth.
All right, so what can we expect from markets in Europe today?
Laddie, markets here in Europe are expected to trade higher today. Now, that comes after U.S. Fed Chair Jerome Powell signaled that he is considering a potential rate cut during his appearance before the Senate Banking Committee on Tuesday. However, he also said that more evidence is needed to show that inflation is moving sustainably towards the target inflation of 2%. So investors will be on the lookout for further clues. Many are betting on a rate cut in September. Today, they will watch for more signals from Powell. He is due to address members of the Financial Services Committee of the U.S. House of Representatives. And here in Europe, Volkswagen shares will be in focus on the DAX, which is, of course, Germany's blue chip index. On Tuesday, the car maker cut its profit forecast due to weak demand for one of its luxury electric vehicle models.
All right, all eyes on the central bankers at this time. Thank you so much, Aponda Chibelu. Thank you. Let's get a check on other stories now. The electricity sector. See, electricity remain a threat to businesses and economic activities. The independent power producers are leveraging the amended electricity bill to boost supply with a promise that those tariffs will be higher, but electricity will be constant when the bill is domesticated and implemented. This was shared by Managing Director of Welbeck Electricity Independent Power, Mr. Afolabi Yella. He was a guest earlier on Business Morning.
About grid collapses, and whenever that happens, we look at the system operator. In Lagos, once it has its own electricity market, it will have an independent system operator. That system operator will operate the markets, will be in charge of operating the market. The state government will still regulate the market, but the system operator will be in charge of operating the market. So I think that will also help a lot with improving service. We will see a cost-reflective tariff. Some people may pay more for electricity, but it will be much more available. And if I can just give you a figure, in Nigeria, the whole of Nigeria, we spent 20 trillion naira on generating electricity. Only 1 trillion of that went to the grid. So that means Nigerians are spending 19 trillion to generate electricity themselves. In Lagos, we generate about 16,000 megawatts of electricity. That's 4 times the national average. Out of that 16,000, I think it's only 1,000 comes from the grid. So Nigerians are spending a lot of money generating electricity themselves. If that money, even just part of it, can be put back into the grid, into investment, Nigerians in total, on a holistic basis, will be paying less for their electricity, even if their tariffs are increased slightly.
Right, we definitely want to pay less for electricity at this time. Shout out to the Band A customers. Let's look to another conversation. Now, in 2024, there's a clear trend among financial institutions towards migrating their operations to cloud-based platforms. This shift is underscored by recent research conducted in 2023 by McKinsey and Institute for International Finance, involving about 37 financial services. We see top technologies used by financial institutions. We see cloud and edge computing topping there with 84%, applied AI 78%, and next-gen software development about 73%. Let's discuss this now with Chukwuka Awobolu, who's a cloud engineer, joining me via Zoom. Great to have you on the show.
Yeah, hello, hi, Ladi.
So talk to me about cloud computing and why we're seeing these financial services operators actually adopting this technology more and more.
Yes, so cloud computing is a situation whereby you have your cloud, your infrastructure hosted on the cloud instead of hosting it on premises. Instead of having physical servers or physical infrastructure, you host them on premises. So some of these infrastructures are things like your servers, your storage, your database, your networking, your softwares, analytics, and all your intelligence, hosting it over the internet, and gives faster innovation, flexible resources, and economics of scales. And basically it works by, you can rent what you want to use. That means you pay for what you use, and what you don't use, you can turn it off. And most of this software runs on data centers and can always be utilized. So fintech industries can also utilize this cloud computing. And the way it works is you have different cloud services you can choose from. You have Microsoft Azure, you have AWS, and you have Google Cloud, and you have some others like Oracle's. So there are more cloud service providers that you can actually choose from and host these services in the cloud.
All right, so how has cloud computing changed the landscape of the fintech industry, globally? Then, also bring it down here to Nigeria, because we have a lot of fintechs, springing up here and there in Nigeria.
Yes, so in Nigeria, there are lots of fintech industries, and I'll list some of them that have actually made some change in the landscape of fintech industry. For example, we have OPay, and during the crunch or during the election time where we had some kind of scarcity, OPay was one of the fastest way to send and receive money from people. And majority of the time, because these services run on a larger cloud infrastructure compared to traditional banking systems, so they have a faster way of scaling up, and they can actually use them for getting speed and reliability when it comes to fintech. And because these solutions is not limited to any physical location, so users can actually access the information at the same speed anywhere in the world. And to the founders of these companies, they don't spend money opening branches in different locations, because the cloud is actually something that can be based on access remotely. And you have the feasibility of scalability, you have cost efficiency, you have seamless data management. So some of these are things that these financial services actually took and able to utilize them to be able to get the right optimization. And furthermore, we have open banking system where you have banking as a service, you have microservice architecture. Some of these technological tools are tools like containerization, whereby some of these fintechs can actually put some of their technologies on these containers. And you have data encryptions, you have security patches, you have auditing, monitoring, and companies can also protect sensitive data and use most of the security features. So these are things that change the landscape in Nigeria when it comes to fintech.
Right, but are the traditional banks, are they adopting cloud technology at this point? Because sometimes it gets frustrating when you're trying to send money over the apps, and you're not sure if the money actually went. You see failed transactions here and there. How are the traditional banks looking when it comes to adoption?
Yes, so to the best of my knowledge, I think recently most bankings have actually adopted the hybrid framework, and banks these days have their infrastructures or their services hosted partly on premises and partly on cloud. So that way they get to migrate, they get to transition some of their infrastructures from the on-premises to the cloud. And these days you can see that some banks, they're actually accessed faster, and you have sometimes you have updates, you have upgrades from the banking applications, and you can actually use them seamlessly. In the past 5 years or 10 years ago, you might not be able to use some of these banking apps as fast as they are these days, because now they have most of their infrastructures hosted in the cloud, and this way they are able to adopt most of these cloud services and offer better services. And I believe in the future, most of these traditional bankings will also move all their services to the cloud and be able to compete with some of these fintech companies.
So talk to me about how, engineers like yourself are contributing to adoption, of cloud solutions in Nigeria's fintech industry.
Yes, so engineer like myself, for me, I'm the founder of John Cloud Technology, and mostly I speak about, or we try to get companies that would like to move their services to the cloud. And some of these services, we do some kind of audit and give them cloud migration strategies or cloud migration ideas, and they can move their applications or move their services to the cloud using microservices like Docker containerization to boost productivities. And as Tron Cloud Technologies, most of our partnership are some of the cloud providers like the Microsoft, AWS, GCP, and also partner with some Nigerian-based CSP that can also help. And some of these fintech companies, we also speak to them and give them the best solutions for their cloud so that they'll be able to also optimize their services and also save costs. And most times we also give trainings to these fintech companies or to individuals that are interested, so that they'll be able to make use of these services.
Okay, well, definitely. I'm thinking of what I want to put on the cloud at this time. But thank you so much. It was great. It was great having you. Chuka Onwubolu is a cloud engineer. Thank you so much.
Well, thank you. Okay, bye.
All right, let's get a check on some other stories. Now, we see Egyptian inflation slowed for a fourth month in June, shrugging off the impact of a historic hike in the cost of subsidized bread, and that normally feeds a majority of the population. Consumer prices in urban parts of North African country grew at the slowest pace since the start of 2023 and reached an annual 27.5% compared with 28.1% in May. And Ghana's annual inflation for June, that was at 22.8%. The estimate was about 22.5%, according to the Bank of Ghana. We see Ghana's annual inflation, that slowed to a more than 2-year low in June, potentially putting an interest rate cut on the table. Though we're still seeing food prices gaining right there. Consumer prices rose about 22.8%, at the slowest pace since March 2022, from 23.1% in May. And that's according to the Statistician General right there in Ghana. All right, let's get a check on the crypto market now. Let's get to see what's happening there. I know it was profit-taking yesterday, but now we're seeing some green on the screen. But on the flip side, Ethereum was mostly in the green when Bitcoin was down. But now Ethereum is in red while Bitcoin is in green, and major markets that we track at this time. Let's look at some headlines now. We see an Ethereum whale has transferred $50 million from Binance. That's taking off most of those Ethereum to the private wallet. So investors are wondering what this whale is trying to do at this time. Then we see a decade-old Bitcoin wallet just became active at this time. We know there are a couple of people that track most of the old Bitcoin wallets. So when these wallets come online, it means something is about to happen. Maybe they're trying to sell off some Bitcoin at this time. All right, let's talk about issues in the market. Now we have Rume Dominic joining us. He's the Deputy Managing Director at Aviat Industries. Hello, Rume.
Hello, Ladi.
Fantastic. It's great to have you, Rume. So I saw reports yesterday of Binance might be bringing back their P2P market in Nigeria, but I've not heard anything from Binance here. It's just chatter right now on social media. But talk to me about the prospects of the P2P market, a more regulated version, returning back to Nigeria.
The P2P market, you can imagine a global market that you need to access crypto for Naira, but that global market is just on your phone. And that's the possibility that the P2P market always brings to the cryptocurrency traders. For Binance as a platform that offers such a service, that particular service that we were offering at a point in time was cut down by the Nigerian government. And because there is a clear regulatory framework at the moment in the Nigerian cryptocurrency ecospace, followed by this recent RIP program that has also been launched, we're hearing rumors that the Binance peer-to-peer platform is going to come back. Although it is somehow a bad news for people that have been able to curb the Naira to dollar inflation in some way, that they think that they have curbed it because they were able to close the Binance peer-to-peer, because we'll start seeing another maybe high level of fluctuation in the Naira. But overall, I think it's a good thing if the Binance peer-to-peer marketplace resumes in the country.
Right, and definitely this plays into most of these crypto platforms actually paying tax, to the Nigerian government. How's the industry, that's most of these investors, how are they seeing the expectations for their trades, being taxed?
The reactions from the traders have been alarming, because a lot of traders were agitated. A couple of them did understand, because when you come from that point of understanding, you then have a framework of the rate at which they are charging you or what they are charging you for. So it is important for us to educate our listeners on what they are actually being charged on. So what the government is charging you on just your transaction fee. Let's say you are exchanging from Bitcoin to USDT and the transaction fee is $1. So they are charging you a VAT on just that transaction fee, not your capital itself or the volume at which you are exchanging. And they don't even charge you, they charge the cryptocurrency exchanges providing that service. So with Binance having a lot of millions of users coming back into Nigeria to be able to offer such a service, the Nigerian government would actually be able to make a sufficient amount of return from that particular tax.
Right, and just quickly now, before I let you go, we had Powell's comments yesterday at Congress. How do you see that impacting the crypto market?
The comments, truly, my very good friend, is something that would impact the liquidity in the financial system. Decisions on interest rates and open market operations, they usually directly impact the liquidity in the financial system, and they affect various asset classes. Where consumers and investors will now start hoarding cash and they will refuse to spend, even when the economic policy makers cut interest rates, they will still hold this cash and they will refuse to spend. So this decision that they have made will truly affect the liquidity in the financial system.
Right, I guess all investors want to know is, when is the U.S. Fed going to cut rates? We'll definitely find out at some point. Thank you so much, Rume Dominic, Deputy Managing Director at Aviate Industry and founder at Vorum. Thank you.
I'm grateful. Thank you for having me.
All right, that's the show today. Visit channelcv.com for more updates. You can also watch our YouTube channel again if you want to see this again. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.